enabled. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future.
Hello and welcome to the special series WazirX and CNBC TV18 present Crypto, Digital Assets of the Future. I am now joined by Douglas Horn. He's Chief Architect, Telos Blockchain Network. Douglas, hi, good to have you on the show. You are a decentralized blockchain, but one thing you are definitely known for and has been in headlines is because of your launch of the EVM mainnet. Do tell us more about that. What does it mean and how does it help the overall blockchain network?
Thank you, Manisha. I'm really happy to be here. Telos EVM is a new addition to the Telos blockchain that started 3 years ago on our mainnet. The EVM is a new development that we've been working on for a year, which means that Telos is the first blockchain, smart contract blockchain, that can run the two biggest smart contract programming languages, both EOS.io and Solidity, for Ethereum. So it's very interesting, and they can even run these together. And as it runs Ethereum and Solidity contracts, the exact same ones that are run on, say, Ethereum or Binance Smart Chain, it is able to do that with much higher capacity. It's able to do it about 100 times the capacity. It's able to do it in each transaction each block is only half a second, so it feels as fast as using any other mobile app instead of the wait that you usually have, and the cost is very low. And for me, the biggest thing is that there's no front running. Front running has cost DeFi users about $1 billion since the beginning of January of 2020. That's a lot of just stolen value, and Telos completely eliminates that through first in, first out transaction processing.
For our viewers, the EVM means Ethereum virtual machine, and that is what Douglas is talking about as well. So, Douglas, when you talk about speed and greater intensity and lower fees, I mean, those are the basic, concepts of overall blockchain. That is the reason people are into this, apart, of course, from it being decentralized there. But do tell us about the frontlining part of it, the front running, that is. How much prevalent is that in blockchain? Because there are a lot of people now investing in cryptocurrencies, as many as there are products that are coming up as well. How big a concern is that?
Well, I think it's a big concern, and I think the only reason people haven't heard more about front running is that there's not any other solution, so people try to keep mum about it. But anytime somebody puts a big transaction in on DeFi, or is trying to buy an NFT that's expensive, there's always the risk that somebody running a bot or the miners themselves will just see the transaction coming up and inject their own transaction in front of it so that it can steal part of the value. As I said, since January 2020, there's been $1 billion stolen just on Ethereum using this on the main DeFi platform. So it's very prevalent. It happens because there's something called a mempool that holds all of the transactions, and the miners, the mining pools, are able to put in transactions however they want. On Telos, on the other hand, these are processed first in, first out, so no one can jump in front of you. And again, that's another reason why it's really nice that these are half-second blocks as opposed to 15-second blocks. It's a big difference. It's stealing a lot of value from people. And in my view of DeFi, it was always meant to be, decentralized or democratized finance, but to date, it's only been available for the very wealthy because of two main reasons. One is the very high cost of transaction fees of gas on Ethereum, and the other is because of things like front running. You can go to dextools.io and you can literally see people getting value stolen from them from front running. So we're here to solve both of those problems so that it extends DeFi and the ability to have democratized finance to people at much lower monetary levels than was ever possible before. You could make $5 transactions that are profitable as opposed to having to make $2,000 transactions because the gas cost $80, right?
Sure.
I think that's a big advantage.
Douglas, would you say that the Ethereum 2.0, while was sorted or put out to solve a lot of these issues, it hasn't really been able to do that?
Well, I mean, you're right. You're exactly right. They needed to move to a different format. They needed to move to proof of stake in order to solve these problems, but it's still it's still quite a ways off. The Ethereum 2.0 has several phases, and they've really only done the first phase, and it's not until the fourth phase that anybody gets that we get the value that we're all thinking of. So it's a long migration, and until it happens, people are trying to do really convoluted things like these roll-ups that store everything off Ethereum and bring it back on. It's much simpler to just have a simple, single Ethereum-like EVM, like Telos EVM, where everything can be done on-chain. You don't have to worry about whether a roll-up is going to be accepted or not. It's just much simpler, and we're excited because AnySwap and SushiSwap have both come on to Telos EVM. We only launched this a little over a week ago, and those two platforms are now on. Liquidity is starting to flow in. It's really a fantastic way to experience DeFi. In my experience, after doing it just for a day, I couldn't really go back to the other kinds because it's just so much faster. You don't even have to think about gas because the gas price is flat. Everyone pays the exact same gas fee. And again, a transaction that might cost just a transfer costs less than a penny, and a swap that might cost $30 or more on Ethereum costs 5 cents.
All right.
So it's a big difference. Not only is it faster, when I say it's cheaper, it is. It's significantly cheaper, and it's not directly linked to the price of the Telos token, which means, in fact, we've added costs because if you get costs too low, then you get a lot of spam and things. And so as the Telos price goes up, we will be able to lower these costs to keep them around the same area for quite some time. So this really is made for users. It's actually fun. It takes a lot of the worry out because the transaction's just done,
Douglas, the way the market is, DeFi is one part of it, and the most important part clearly, but smart contracts and cryptocurrency, the trades within that, the ETFs that have gotten launched, and this whole world of NFTs and metaverse exploding right in front of us. What's your sense on what kind of a growth are we looking at?
I've been in this space for many years, and I've been a builder of this space with Telos alone for over 3 years now. And my belief is that we've only started to see scratch the surface of the growth that all the uses of EVMs and other blockchains will have. I think that governance is a great use that we're only starting to see. I think people are liking NFTs. Right now, they're mostly buying pictures, but each of those NFTs could also be the title to land. In fact, on Telos, we have legal DAOs set up in the U.S. state of Wyoming that are legally set up as DAOs. They own land, and people can buy fractional parts of that land and trade them, and if there's revenues, get them back. That's when we get past these initial uses and we start saying, well, that's really where it's much more efficient to save to record all your land deeds, your ownership of your car or your apartment, other tangible assets that we record on the blockchain and can trade fractionally and can get revenue back from. I mean, it shows how much growth there can be in financial services all over the world. Like, we're barely imagining it, and it's only going to grow, in my view.
All right. I like when you say that we're the scratch of it and this market is only going to go higher from here. But on that note, we need to stop for a very short break. When we come back, we'll talk about the participation aspect of it, retail, institution, and the kind of whales holding that we are seeing in this space. We'll get a sense of all of that from Douglas.
WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future. WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future.
Welcome back. We are in conversation with Douglas Hahn. Douglas, you talked to us about the speed, the importance, and of course, the kind of participation that we've seen when it comes to DeFi and DAOs and how the use cases only seem to be improving right now. I want to turn your attention to the cryptocurrency part of it as well. And that is where almost, not almost, some percentage of each country is definitely onboarding on this. And this is by investing, putting money in various cryptocurrencies. What's your sense, whether it has been about retail, institutional, the way the funds are coming in now, and corporates also putting this on their balance sheet?
Well, I think that, of course, it's been a retail market from the beginning. And we are only, I think this year, the 2021 is the year that we started seeing any kind of moves in institutional investing. And I think that's because they don't go willy-nilly into investments. There are boards. They have to go through long processes, most of them, before they will start investing. I think what we're seeing now is just the tip of the spear that every big institutional investor is at least considering these, and they all will have their own due diligence process, and it will take their own time, and it will take longer. But to be honest, everyone is going to be chasing these level of gains with some part of their portfolio, right? That may be 2%, 1%, 5, 10. It's not going to. No, there are very few institutional pension funds and things that are going to go all in on crypto. But they are. But I think almost all of them will soon be forced to have some position because of the returns, and it's just become a new asset class. It's seen as a way to make great gains. There may be risks, but as part of an institutional portfolio, it definitely has a place. And I just think we're going to see more and more adoption because they're not going to start now. They started 2 years ago looking at these, and it just takes a long time to get to yes.
But Douglas, also, how important do you see institutions being a part of this? We have seen big numbers come in from whales also. What is the kind of importance that you see of whales in cryptocurrencies? Because they are holding a huge amount of cryptocurrencies and for a longer time.
Yeah, well, I think there are a couple kinds of whales, right? There are, and the way they relate to institutional investors, I think institutional investors will be a stabilizing force because they don't go into things easily or out of things easily. They have long time horizons, and they are not as prone to panic selling and things like that as retail investors are, right? So that will over time level out the volatility that we see. I think that there are whales who buy and hold and never sell or rarely sell. But there's also a kind of whale that uses the ability of their large amount of assets to actually manipulate the market. And we can't stop that. I wish that weren't the case, but these are financially savvy people, and they're all fair in love, war, and DeFi, I guess. But they are. But I think that so that's almost a force for amplifying volatility, whereas the institutional investors are an offsetting force for moderating volatility. And I think that's going to become an important thing as we move forward. So prices of larger institutionally invested assets may not rise as fast, but they also won't be as volatile.
All right, that's good to know. And that exactly was my next question, really. The kind of volatile moves that we see in many of these cryptocurrencies, look at any one of them, from Bitcoin to altcoins to meme coins. I mean, people are onboarding a lot of these into their diversified portfolio within the cryptocurrencies as well. But what's your sense on how much volatility is in store even from here? Do you see, as more people onboard this, the volatility kind of stabilize to some extent?
It depends what the kinds of investors and what ratio they come in. I feel like the more retail investors there are, the greater the volatility will be, because they're easily manipulated by that kind of whale that I just spoke about. I think as institutions are less, because they're just not paying attention every day. I think what we will see, I think we're likely to see a couple of things. I think we are going to see, as inflation worries grow, and people are only now really at the government level are only now starting to address the what we all see at the grocery store or the gas pump or anywhere we go. Regular people are way ahead of the politicians in knowing that there's inflation going on and that it's problematic. And so the inflation, it works really against having your dollars, having your value in dollar or whatever your fiat currency is. And it means that you are likely to move into, Bitcoin, Ethereum. These assets have had a great return, but they also, some of them have strong, more deflationary monetary policy that's going to become more apparent. There's not a lot of assets that either don't inflate or aren't inflated, and so I think that people are going to get more and more interested in cryptocurrency as a hedge against the inflation that's sort of rampant. If you think about the amount of dollars, euro, pounds, all kinds of world currencies that have been newly minted in the past 2 years since COVID. It's a massive amount of new money floating around, and that's actually part of why all the assets are rising, stocks and land and everything.
But Douglas, would you say that's not what the decentralized currencies were supposed to do? I mean, they're actually following inflation and fiat currencies and money policies and interest rates and etc. I mean, it's just being a part of it all.
Well, I think it's hard to have no correlation whatsoever to the broader economy, because people buy things when they have money, and when they don't have money, they sell things to get money, and that's just, especially at the retail level, right? So I don't think it's possible to completely insulate from that correlation. But I think sometimes when there's a shift, it can go from correlated to reverse correlated very quickly, right? If as people feel like the fiat currencies are getting worth less, a lot of that currency can get pumped into cryptocurrencies. Okay. And again, there are some cryptocurrencies that are deflationary. There's some that are amazingly inflationary, or meme coins that have such high numbers it really doesn't matter, because there's a whole spectrum. And for Telos, we really focus on use. Right, this is made to be used. It's made to solve problems, but not all coins are meant to do that. Some coins are meant to, like I think Shiba and Doge are as much about a person expressing their identity as a owner as it is about the actual use cases of those. I think that there's a lot of things. People are expressing their personality and what tribe they belong to, in part through their ownership of cryptocurrencies.
Douglas, every market has a bull and a bear phase to it. How would you put 2021 as, and are there any expectations that you're putting out for 2022?
Well, obviously 2021 has been a fantastic bull market. Telos itself, is up over 100 times its value at the start of the year, and Bitcoin and others are doing incredibly well. I personally think that the bull run will extend. It doesn't mean that there won't be blips. Right, this is there's the volatility is high. The market manipulation by those whales we talked about is high, and I think you really need to accept the fact that sometimes these dumps are engineered in order to allow people to get more. right? And I think it's actually, in this case, I'm not a perma bull at all, but I think that this is bullish. I think that there are people who are making efforts to depress the price so that they can get more. But the other thing I didn't talk about around price action is the prevalence of leverage, right? These are not just spot markets. There's also future markets, and there's leveraged markets. And I think that the high usage right now of by retail investors of leveraged products is actually a mistake. I think that lends to that basically means that it's a way for amateur investors to transfer their funds to more professional investors by putting in high leverage and losing things through stops. Right, a lot of the things we see are very short. They're like almost flash crashes that are meant to run all the stops and basically get people's money. So I hope that with greater utility and with greater adoption will also come a greater sense of financial education by these users so that they stop losing money on things that they really shouldn't be.
Oh, absolutely. That really is the major point, isn't it? And that is something that the regulators also are talking about on protecting investors' money. But thank you so much, Douglas, for that valuable insights. It has been a pleasure talking to you. Thank you for joining us on CNBC TV 18.
WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future. Focus. Ideate, innovate, enable.